Today we want to do a very simple video, and today the video we want to do is about the market execution. We want to do a video about market execution. Market execution. Execution. I think this is the spelling. Execution. Sorry. Now, when I talk about market execution, Sorry guys. When I talk about market execution, I will talk about a trade. Let me say when you are doing something, or when you are employed, or when you want to do something, but you have analyzed your chart, and you know very well that this market will either buy or sell depending on your analysis, but it hasn't reached the price where you want it to sell from, or where you want it to start selling. It hasn't reached the price where you want to start buying. Now this takes us to what we want to discuss today. We want to discuss some four simple things. What do we want to discuss? We want to discuss some four simple things about market execution. We want to discuss what we call buy limit. We want to discuss what we call sell limit, and we want to discuss what we call buy stop, and another thing we want to discuss about is buy limit. All these are what we want to discuss about today, and how to set them up. We want to discuss what is sell limit, what is buy limit, and in a very simple video, because we don't want to make this video very long. It is going to be very simple as the way we used to do it. We are just going to start immediately. Let us start with buy stop. Guys, what is buy stop? Buy stop is an order. Let me just put it in English, then we explain it further. Is an order to purchase a security only once the price of the security reaches specified stop price. It is an order to purchase a security only once the price of the security reaches specified stop price. Now, the stop price is entered at a level set above the current market price, which means a buy stop must be set above the current market price, which means when you can't sell, you can't place a buy stop below the current market price. And it is a strategy to profit from up movement in a stock's price by placing an order in advance. This one is just placing an order in advance because you have predicted that the price will continue going up. That the price will continue going up. But it hasn't reached your certainty, because everybody's analysis knows very well that this price might go. Maybe your analysis, you had analyzed that this market will go up, but it hasn't reached your price. And you wanna go and do some other things else, because you don't want to be glued into the charts each and every time. Now what you do, you just set a buy stop. Let me explain let me explain uh, by example. It is when you understand. Now we are going to explain it just very simple. There's nothing complicated here. Let me say the price was moving this way. The price was uptrending. The price was uptrending. Yes. Now, sorry. Now, let me say the price was uptrending, and you know very well that you are still not certain whether this price will go up. Exactly. Maybe your price was here, and you know very well that this price, when it reaches here, it will continue going up. Sindio? Now, what you do, you set a buy stop here. Let me say, sorry, because that one is in the same price line. You can't set a buy stop there. Let me say you are predicted that the price will go up. Now you're going to set a buy stop here. Sorry guys, let me show you. You are going to set a buy stop here at this place. When you set a buy stop at this given place here, which means, let me say the price was here. The price was here or here, we have marked, and you predict that when the price reaches here, it will still move upwards up to a given place. Now you put a buy stop here, and you know that when the price reaches here, your trade will be activated and will be in a profit up to a place where you have set your take profit. But when the price goes against you, you know very well that you will be in negative. But you are predicted that when the price reaches here, uh, you will your price movement will be still be up movement, will be on a bullish momentum. Now, this is what I want to explain. I want to explain that buy stop, you can only set it above the price. If you set below the price, that one is a sell limit. That one is a buy limit, I mean. Only buy limit is what you can sell below the price. A buy stop you set above the price movement, but a buy limit you set below the price movement. Let me give you a demonstration of a buy limit. Now we are going to talk about a buy limit. A buy limit is exactly opposite of a sell limit of a buy stop. Buy limit and buy stop uh, are, 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 are oppositely. Sorry guys. Now let me talk about buy limit now. What is buy limit? Buy limit is opposite of buy stop. Now let me draw it and you see what I'm talking about. Let me say the price was moving this way. Sorry. Guys, the problem is that will be. Let me say the price was moving this way. Let me say the price was moving. The price was at this place. The price was at this place, and this price is moving downwards, or it is moving downwards. And you know when the price reaches this price, the market reaches this price, it will go up. Now you set a buy limit here. A buy limit is set below the price. When you hit the buy limit here, your trade will be activated and you will go directly into profit. Mostly people use it in a pullback market. Pullback, when I talk about pullback market, it is kind of a retracement. When the market retraces, because you don't expect the market to move directly from you move, the market can't move on a straight line, which means there must be some retracement in and out, in between, I mean. Now that one is all about a buy limit, let us quickly talk about we want to only talk about sell limit, because buy stop, sell stop, I mean, because the time is not on our side and this video should not be too long. Now we are talking about a buy stop. What is a buy stop? Let me say the price was, no, we are not talking about buy stop, we are talking about a sell stop. Sorry guys, we are talking about a sell stop. What is a sell stop? Sell stop. Now sell stop, let me say the price was moving downwards. The price was moving downwards. Let me say the price was moving downwards, and your price is somewhere here. And let me say your price is somewhere here, and you know very well that this price will continue going down. And let me say your price is somewhere here. You set it. Let me say you make an entry somewhere here, and when the price reaches here, you are going to your price will be activated. Your price will be activated, which means this price is moving in this direction. This price is moving in this direction, which means sell stop na buy stop is kind of the same, but this one is a bearish movement and the other one is a bullish movement. Now sell stop, it is created below that price movement. You anticipate that this price will the way it is moving down, it will move the way it is moving on a bearish momentum. When it reaches here, you just set a price below the current price. You set a price below the current price and you predict, well, let me say your analysis was good. When the price reaches that place, it will continue selling. Now, another thing we want to talk about is the sell limit. Let us just quickly talk about sell limit. Sell limit. Now, what is sell limit? Sell limit is now where the price is above the current price. The price is now above the current price. Let me say the price was moving down, and you know that this price will retrace back. Now you put this sell limit above the price, which means when the price retraces back here, it will continue selling. You have done your analysis and you know very well that when the price reaches here, it will continue selling. That one is the sell limit. It is very simple. There is nothing complicated. It is very simple. And when you want to put all these, go to your MetaTrader 4. Just go to click on the market execution, and you will see them: buy stop, buy limit, sell limit. Everything is there. Very easy to set up. Very easy to set up. Now let me take this scenario. Let me take about a buy stop. The price is at this place, and you predict when the price reaches here, it will continue buying, which means you set your buy stop here, or you can even set your buy stop here. It must be above the current market price. And sell limit, buy limit, let me say you know very well that the market will retrace back here and will continue going up, which means you set your buy limit here. And it is the opposite of sell limit and the buy sell limit and the sell stop. In sell limit, the sell limit should be above the current market price, but the sell stop should be below the current market price. Guys, that one was very simple and very easy. And thank you all, and continue watching. Sorry guys, this one I have some interaction here. Thank you guys, and let us meet in the next video.